Namaskar and thank you for tuning in to the Economic Brief, the program that places economy-related news in the context of India and the world. On the program, we look at a list of India's top producing states and understand what's driving them. The Vietnam economy is picking up momentum and contributing significantly to ASEAN's rise. We'll see why. And contrary to Guterres' hope of a quick, cleaner energy transition in 2025, the IEA sees demand for fossil fuels rising significantly. Now, before we move on, let's take a look at what the CEO and the Secretary of the Coffee Board of India, KG Jagadisha, has had to say about India's rise in the share of coffee exports and also meeting future targets. Let's listen to what he had to say.
April to November, we already achieved $1.15 billion worth coffee exports, which is, I think, a new record. And by the year end, government has given for this year 1,412 million USD dollars export. Out of that, 81% we have already achieved now. And what we have achieved so far itself is a record. But the end of the year, we will be achieving a new record in terms of coffee exports. Thank you.
Okay, now let's take a look at some of the top producing states in India and understand as to why they are doing so well. Let's look first at Maharashtra. Maharashtra is the richest state in India with a projected GDP of about $507 billion, and the GDP per capita is about $3,440. And it's, of course, share in the national income is a good 13.3%. Maharashtra aims to double this, to become the first state in India to be a $1 trillion economy for the state by 2030. It's strong in textiles, auto, pharmaceuticals, chemicals, metals, capital goods, and the like. Tamil Nadu is also a pretty strong state with IT and ITES being the major drivers. It's a global hub for metals as well as minerals, and we can see its contribution is about $375 billion right now, its GDP. And of course, its share in the national income is about 8.9%. Let's move on then to our next state, and this is Karnataka. Karnataka, as we know, is the IT capital of India. So it's really software that's driving this particular state. It's the home of the fourth largest technology cluster in the world. And we can see that $334 billion is the size of the GDP of the state of Karnataka. Its share in the national GDP is about 8.2%. Per capita of both Tamil Nadu and Karnataka is a little higher than that of Maharashtra, and that is about $3,940. Now, the projected GDP of Gujarat, which is a highly industrialized state, pretty much like Maharashtra, is about $332 billion. Gujarat is, in fact, India's most industrialized state. It's pretty similar to Maharashtra and the types of industries that are coming there. And we can see that, 8.10%, 8.10% of the GDP is the share in its GDP. Now, let's look at Uttar Pradesh then. This is the fifth richest state in India. It's the largest state by population, of course. And $297.5 billion is the size of the GDP of the state. The GDP per capita is not very high, but the state is, of course, good with agriculture and allied sectors. Industry has both large scale and small scale. These are some of the other states that are following that. If you look at the top 10 states, then there comes West Bengal, Rajasthan, Telangana, all of these producing about over 5%, then coming just below 5% of India's GDP, Telangana, Andhra Pradesh, and Madhya Pradesh. So these are India's top states in terms of the contribution to GDP. But India is also doing reasonably well as a space economy. And let's understand why we have a comparative advantage in the space economy. Let's listen to India's Minister for Science and Technology telling us why.
Space missions are just a fraction of the cost of the counterpart missions sent by other agencies, though we are in a select lead of just about 3 or 4 nations. Our application of space technology in different sectoral projects is much higher in scale compared to any other country, whether it's the health sector, it's the agriculture sector. So you name any sector, space technology in India has been applied almost in every sector of development and every infrastructure project.
So let me introduce you to our guests on the program. We have with us Professor Sachin Chaturvedi, eminent economist, Director General of Research and Information Systems for Developing Countries, RIS. And we also have with us Narendra Taneja, Distinguished Fellow at Oxford Institute of Energy Studies, a global expert on geopolitics of energy and on geoeconomics. Thank you very much, gentlemen, for being with us. Professor Chaturvedi, let me start with you. Briefly, how effective is the strategy of competitive and cooperative federalism?
Mark, I think as we begin this year and about to close the financial year ahead of us, there are three major trends that we are seeing in our sort of competitive character of our economy. As your report very rightly pointed out, Maharashtra, Karnataka, Tamil Nadu, and Gujarat, the four key states with almost 8 to 10% share in our GDP. So their GSDP are quite well placed in terms of how economy is going to get engine from convergence of several factors: the ease of doing business, the logistics improvement, the infrastructure improvement, and much more than that, our focus on skills. And all the states which have focused on these four dimensions are excelling. And they are much more ambitious in terms of setting the targets and also contributing in terms of how economy creates more jobs, also producing exportable items. All the four are also leaders in exports. So if you see almost 40% of India's export is coming from these four states. So they are really excelling. But it's good that in your second slide, you could capture the emerging states, which are having at this point 4% to 5%, Madhya Pradesh, Uttar Pradesh, Telangana, all the states that you listed. So I think the idea of a competitive spirit across states to attract foreign direct investment, to attract skills, talent, and the investor summits. Prime Minister has been participating in all of them, but then the states have to take that forward. And now states are realizing, after consistent efforts of last 10 years or so, you find that states are not on autopilot mode to get more investment, streamlining their policies on investment.
Okay, indeed. Mr. Taneja, how do we get, all states to grow fast going forward? Because we need to meet those 2047 target, isn't it, of becoming a Viksit Bharat?
Well, that's a very interesting way of looking at it. But I think the important thing at this stage is that whosoever is doing good and has a bigger potential, I mean, we have to, incentivize them, give them whatever support they need. But at the same time, states which need more hand-holding, let's say from the center or from, bigger industrial houses, I think that also need to be coordinated. But important thing at this stage is to boost country's GDP. Look at Germany, for instance. All states within the Germany are not doing as well as, for instance, Bavaria. The United States story is more or less the same. But here, of course, that, even Uttar Pradesh that you mentioned has its tremendous potential. And actually, if you look at the track record of the last 4 or 5 years, state is doing very, very well. And there is a lesson for Bihar and West Bengal and other states to learn, for instance, from Uttar Pradesh. So I think the important at this stage is that we boost our, GDP, we boost our economy, carry out the reforms that we need to, and we, give this signal that whosoever needs hand-holding, support, incentive from the center, that is available, whether from the government or for that matter, your big industrial houses. Also important, the states which need more investment, that we actually incentivize in one way or another. There's policy, tax concession or whatever, so that big industrial houses, whether the private sector or for that matter, the state-owned big company, they invest more in these states like Uttar Pradesh, like Bihar, like Northeast, West Bengal, Orissa. Is important. We need to kind of give them some kind of a special package or scheme, whatever you may call it, so that make sure that they are also able to realize their full potential. But overall spirit in the country, when you compare India, is very good. You can see enthusiasm that you rarely see in any other geography today. India is one country where you see this, enthusiasm, big dreams, and I think we are on the track to be $7 trillion economy ASAP.
Indeed. Professor Chaturvedi, are states which are agrarian not being given their due? Because, cities may be generating the high growth, But we are, after all, I mean, Uttar Pradesh has a lot of agrarian products.
Mark, we have very closely studied this trend at the global level. And of the countries that we have analyzed in our study, countries that are producing grains and excelling in the global market are also the countries which have actually got into producing agriculture equipments. So we need to focus on connecting manufacturing with agriculture. And this probably would be the way forward for states which are heavily into agriculture, like, for instance, Madhya Pradesh or many other states which are producing huge contribution for our agriculture food basket. They need to get into manufacturing, and manufacturing should be their next growth trajectory.
Indeed. Let's move on to our next story then, and this is about Vietnam. Vietnam's economy is experiencing robust growth in high-value manufacturing and technology sectors. Its strategic location, cost competitiveness, and young and dynamic workforce contribute to productivity and innovation. There's also a growing domestic consumption, much like in India. So Vietnam's economy has shown resilience. Its GDP growth is projected to be about 6.1% in 2025. Let's take a look at this report.
Vietnam's GDP was forecast to have reached $450 billion in 2024, ranking 34th globally. By 2029, it's expected to surpass Singapore's, hitting $676 billion. Vietnam's economic strength lies in its manufacturing and exports, with major companies like Samsung, Intel, and Nike having significant production bases there. It has a youthful and increasingly educated population to support its expanding economy. The country has large exports of rice, coffee, and seafood. Vietnam's strategic Southeast Asian location provides access to major shipping routes and key markets. India's growing ties with both ASEAN and Vietnam bode well for the economies of South and Southeast Asia. Investments in infrastructure, transportation, energy, and technology boost Vietnam's economic capabilities and attract FDI. Investor concerns arise from Vietnam's recent anti-corruption drive, which has ensnared many officials and business leaders. Notably, a top property tycoon received a death sentence, and a leading soft drink company head was jailed for 8 years due to alleged billion-dollar frauds.
Whether they will continue with the same intensity or not, or will they lessen the intensity to balance between economic development and fighting corruption, is something we need to watch.
Ho Chi Minh City opened its first metro line in December after years of delay. Built with Japanese financial aid, construction started in 2012 and finished 12 years later, costing over $1.7 billion, more than double the initial $668 million estimate.
Decision-making has slowed in Vietnam, and people are afraid to take certain kinds of money from foreigners because it might cross the line and get them involved in accusations of corruption.
Metro rides will be free for the first month. Vietnam plans 6 more metro lines in Ho Chi Minh City. To sustain growth, it aims to improve labor productivity, invest in education and advanced technology, which are crucial for narrowing the income gap and solidifying its regional leadership. Ties with the US have improved over the years.
Next year, the year of 2025, would mark the 30th anniversary of the normalization of relations between the US and Vietnam. And we have seen rapid, comprehensive progress in the relations of the two countries.
By 2039, Vietnam's GDP could reach $1.41 trillion, ranking 25th globally and becoming Southeast Asia's third largest economy. This growth underscores Vietnam's resilience. By 2025, GDP per capita is expected to rise to $4,783, classifying Vietnam as an upper middle income country. The Economic Brief, DD India.
Let's turn to our guest once again. Mr. Taneja, will, a tight government control deter investment? Because, death sentences to top businessmen may not be sending out the best signal.
Well, not exactly. In fact, it sends out the right message that the government is on it. I mean, there have been some reports, but I think if you look at, for instance, compare Vietnam today and Vietnam 10 years ago, countries doing very well. Let's not forget one thing. When we look at the geopolitical landscape of Asia, in particular Indo-Pacific, Vietnam is a very, very important country, especially for countries like India. I mean, in order to ensure that the future Asia is kind of more conducive for us, more kind of, compatible in terms of how we look at Indo-Pacific. It's important that Vietnam becomes bigger economy, is more successful. The same goes for Japan and, of course, South Korea. But very importantly, at the same time, Indonesia. So Indonesia and Vietnam are two very important pillars for us as far as our Asian security is concerned, geopolitical security is concerned, economic and energy security is concerned. So therefore, Vietnam is a strategic partner for India, is a strategic partner for the United States, for Japan, for Korea, for Indonesia, for Australia. There are, of course, some challenges because the political system is very different. But the message is that they're working on it, making sure that more investment can flow in. And Indian companies are also flowing there.
Absolutely.
In fact, ONGC was one of the first foreign companies to go and invest in Vietnam. So we are strategic partners. A prosperous, stable, Vietnam is in India's geopolitical interest to make sure the future of Asia is multipolar, it's not unipolar. If we want to make sure Asia tomorrow is multipolar, Vietnam must succeed, Indonesia must succeed, and we must actually grow even faster.
Professor Chaturvedi, the metro line in Ho Chi Minh City, it took 17 years to build, from inception. The cost delays made the cost nearly triple. How would investors look at that kind of delay?
Mark, let me take just one step back and support what Professor Taneja was mentioning. See, economic strategies of countries and the countries that are excelling, and as your report said, they would be the third largest in ASEAN and 25th largest in the world. These are those countries, Mark, which are focusing on interlinkages between trade, investment, and technology. Vietnam is a very clear example. If you see last 11 months, the trade surplus for Vietnam stands at $24.3 billion. And the FDI in the last 3 quarters is $22 billion. And your report very clearly showed the emphasis they are making on technology. So this, I think, is absolutely clear in terms of business orientation of Vietnam and the country which is realizing and putting fundamentals in place. And I think the countries which are conscious of this and aware of these interlinkages at the sectoral level, they are the ones who are going to excel. So I do not see any problem in terms of how the combination of a very generous fiscal support to the projects like Metro and also very flexible monetary policy. So with this, Vietnam is likely to move ahead. The delay in the projects are part of the game, but I think investors are getting the message very clear.
Indeed. And of course, they are going to play a significant role in ASEAN. So let's move on to our next story. And this is the year 2025 is likely to see an increase in the demand for oil and fossil fuels. The IEA expects that non-OPEC plus nations will be boosting supply to about 1.5 million barrels per day in 2025, driven by the US, Canada, Guyana, Brazil, and Argentina. Aman Kumar Himanshu reports.
The year 2024 was an eventful year for energy markets. Oil prices were heavily influenced by Chinese demand and Middle East tensions, while United States remained cautious about production growth. International Energy Agency released its monthly oil market report in which it projected comfortable oil market growth in 2025 despite OPEC Plus group extended oil supply cuts. The UN chief, however, hopes the world will speed up transitions.
In 2025, countries must put the world on a safer path by dramatically slashing emissions and supporting the transition to a renewable future. It is essential and it is possible.
According to the report, global oil demand growth is now projected to surge from 840,000 barrels per day in 2024 to 1.1 million barrels per day in 2025, lifting consumption to 103.9 million barrels per day in 2025. This increase is largely attributed to heightened demand for petrochemical feedstocks.
OPEC has consistently advocated a balanced approach where nothing and no one should be dismissed. We need to embrace all energies, leverage all the available technologies, and ensure that the needs of all peoples around the world are taken into account. This means recognizing that the focus of the Paris Agreement is reducing emissions, not choosing energy sources.
However, the agency has also revised its growth estimates for 2024 downward, reducing them by 80,000 barrels per day from previous forecasts, largely due to weaker than expected deliveries in China, Saudi Arabia, and Indonesia. The International Energy Agency said it still expects an oversupplied oil market, even if OPEC Plus continues to delay the unwinding of its additional voluntary production cuts. At the same time, the International Energy Agency expects non-OPEC Plus nations to boost supply by about 1.5 million barrels per day in 2025, driven by the United States, Canada, Guyana, Brazil, and Argentina. In contrast, OPEC Plus producers maintain more controlled output levels, adhering to their production agreements aimed at balancing the market.
Trade barriers can well be a factor slowing down the global clean energy transitions. And the fair and the inclusive trade policy is something I prefer.
Meanwhile, India's oil demand growth rate has outpaced China in 2024, marking its significant shift in the global energy landscape. According to S&P Global, India's oil demand growth is expected to extend into 2025, with growth projected at 3.2%, nearly double from China's 1.7%. The International Energy Agency's report underscores 2025 as a pivotal year for the oil market, with significant implications for producers, consumers, and policymakers. The interplay of demand recovery, supply strategies will shape the trajectory of the global energy landscape. The Economic Brief for DD India.
Well, Professor Chaturvedi, our oil economy is getting a fresh lease of life because of the forthcoming Trump presidency.
Definitely. And I think more options are right up there. The effort by the US administration probably would be clear in terms of how the decoupling is to be done. As you can imagine, for last couple of years, India has exercised all possible sources for ensuring affordable, cost-effective, and ensuring adequate supplies for our energy security. And this has, in a way, facilitated larger gain for Indian consumers and a win-win with our partners.
Mr. Taneja, should carbon trading be taken as a means, for countries to gain revenues and also to increase the legitimacy, in fact, of long-term interests of the oil economy when people are trying to transition?
Well, yes, in fact, that's very important. And the government of India has already come out with new initiatives on that front. But I think what's important for economies like India and many other, emerging economies is the availability of oil and gas. You see, what has happened in the last 4 years, there's been excessive focus on renewable. Renewable is the future, no doubt about it. But I think for economies like us, we need all sources of energy. So, the United States, IEA, they've all become the cheerleaders of renewables, which is fine for them because many of them are developed economy. IEA represents economy of the developed country. But for economy like India, Brazil, Indonesia, Vietnam, we need more oil, we need more gas, we need even more coal. At the same time, when we look at our track record in terms of renewables, we are doing better than most developed countries. But renewables are not renewables are only supplement.
Right.
Because we are poor in the world, 4 billion. So it's important that while renewables, but at the time we show an affordable energy available for all economies across the world. That means we need more oil. And the good thing is President-elect of the US, his slogan is drill, baby, drill. Means, you go and exploit oil and gas wherever it is available. Of course, you take care of the climate, you take care of atmosphere, but mobilize that oil. It's a very good message. And I think it's going to basically put pressure on prices. That means the oil will be more affordable. If oil is in the region of $70 per barrel, that's what we need. That's what our economy needs. If it can drop below $75 per barrel, great news for India. Since we are energy deficit, we import 88% of our oil requirement. Oil, between $60, $70 per barrel is the best thing that can happen, not only for economy, for the ordinary consumer, for our farmers, because fertilizer dependent on gases, and for our economy. For the entire global South, President-elect Trump's slogan of drill, baby, drill is a great news.
We'll leave it there. Thank you very much, Mr. Narendra Taneja, Distinguished Fellow at Oxford Institute of Energy Studies, and Professor Sachin Chaturvedi, eminent economist and Director General of Research and Information Systems for Developing Countries. Thank you for enlightening us on these key subjects. That's all we have in this edition of the Economic Brief, and wishing all of you a very happy, the best for the year ahead of 2025. May it be profitable and innovative. Thanks very much for watching. Namaskar.